Welcome everyone to this presentation from Tiger Brokers on the AGM just held over the weekend by Berkshire Hathaway. They hold their annual meeting once a year, obviously, and Berkshire Hathaway has been in existence since 1965. So we entitle this presentation Catching 2023's Global Investment Trends from Berkshire Hathaway's AGM. My name is Greg Boland and I'm the CEO of Tiger Fintech New Zealand Limited based in Auckland, New Zealand. This presentation is not financial advice and it is our interpretation of Warren Buffett's core takeaways from the AGM that's just been held in Omaha, Nebraska. This session will be about 1 hour long in duration. There'll be about 40 minutes of discussion at the start and 20 minutes of Q&A. And so please send your questions through and our moderator will forward them to us and we'll endeavour to answer them in the last 20 minutes today. We're very fortunate to have Pete Tan, an adjunct mentor and investment manager here from Singapore with us today. Welcome, Pete.
Hi, Greg. Thanks for having me.
Thanks for being here for us. So we greatly appreciate you taking the time to join us. So tell me a little bit about your mentoring and background to start.
Yeah, so I've been a fund manager for about 4 years. And actually on the side, my passion is actually about mentoring those who are serious into investing for themselves, right? So I coach them on investing. And this year, together with some of my colleagues, we took a trip to Omaha, Nebraska to attend the Berkshire AGM, and I'm still at Omaha right now. We just had the AGM yesterday, and so right now we're actually still digesting all the information that's coming through.
Okay, and what time is it there in Nebraska now?
It's about 11 p.m. So we are
thanks for staying up for us. It's 4 p.m. in Auckland tomorrow.
Yeah,
and midday in Singapore and Beijing.
Yeah, that's right. So yeah, no problem at all. Yeah.
So that's the first time you've been to a AGM by Berkshire Hathaway. What was your take of it? What did you go along thinking it would be like, and what was it actually like?
Yeah, so I've been following the Berkshire AGM through Yahoo News and CNBC remotely for many years, and actually it didn't occur to me that I would want to come to the AGM. I always thought I could just watch it over the live stream anyway. But I just wanted to have a feel for myself, and the truth is Warren and Charlie, they are no longer young chaps, right? So I also want to take the opportunity to come here, catch them in person right before I'm too late as well. But really, I think coming here to see that, to attend the AGM live, it's not just to see the two legends in person, but it actually helps me to have a deeper understanding about Berkshire and its subsidiaries, because all the managers were there, right? The subsidiaries actually have an exhibition hall where they are there to meet shareholders, and they are all very keen to explain to us in extensive details about what's happening. And the AGM in person gave me a better sense of what Berkshire is doing, and gave me a lot more confidence going forward as well. Yeah.
Okay, and so within the conference, how many people attend?
Well, it is an overwhelming number, right? The Omaha Chi Center where the AGM is held, I think they have capacity close to 20,000, but the estimated attendance was like, but the estimated attendance was like 40,000. So whoever can get in, they will get in. People were sitting by the stairs, people were standing at the stairwell, and there were even overflow rooms, right? So people actually were put into another room where they watch live stream as well. So everyone tried to get into the main stadium so that they can watch it live in person. Yeah.
Okay. And so in terms of the presentation itself, so on the stage you had Warren Buffett, who's now 92 years old, and Charlie Munger, who's actually 99 years old.
That's right.
So, as you said, it's a great privilege to see them live while you can. I had a similar experience years ago where I actually met Fisher Black from the Black-Scholes options pricing model, and it was a great experience being able to meet some of these legends of finance.
Yeah.
Yeah, so it was. I
Exactly.
can understand, your thrill of actually meeting them. So in
Yes.
terms of the people, so on the stage you had Warren and Charlie Munger, of course, and they sort of made a joke about they were taking TV time away from King Charles's coronation, and
Yeah.
so they started off on a light-hearted way, but then Warren introduced two other colleagues on the stage. So one is Greg Abel, and the other was Adjunct. And so
Yep.
who are they, and what's their role within Berkshire Hathaway?
Yeah, so Greg and Ajit are no strangers to Berkshire shareholders. Basically, Ajit runs the insurance business, and Greg runs everything that is outside of the insurance business. And these are the two, so to speak, left hand, right hand man of both Warren and Charlie. And yeah, the morning session was done by all four of them, and then the afternoon session was actually just solely Charlie and Warren and Charlie. And it's amazing to see them, even at their age, they still have the stamina, to go through almost, I think, 6.5 hours. I was finding it difficult at some point in time to also keep my attention, but they were just going at it and trying to answer as many questions as they can. Yeah.
Yeah, so the actual presentation of the annual result was only sort of 15 minutes long, and then they had 5.5 hours of questions or 6 hours of questions. Amazing, as you say,
Yeah.
amazing stamina for these legends of investing. So let's just have a look a little bit more at so what do you think, or what were the key takes from the presentations that you had? Obviously, their earnings was about 8 billion, which was up a bit from last year, same quarter last year, which was about 7.1. About 3.3 billion of that earnings is from direct equity, so buying shares in Apple and the like. So the income there was around 3 out of 8. And the other 5 is earnings from their subsidiaries and interests. So tell us a little bit about that part of the presentation, about the earnings and that sort of thing.
Yeah, so I think with regards to earnings, it was very quickly, Warren just wanted to set our expectations. He mentioned that most of Berkshire's subsidiary business will be reporting lower earnings this year compared to last year. So even while at this moment they reported about 18% higher in earnings, but he just set the expectations a bit lower since the very beginning. And he said that it is really due to the current conditions. And he thinks that this is one of the most, he didn't really use the word difficult. I think he used the word extraordinary to describe it. Yeah. Since World War
II. Compare it to the period after World War II, where in World War II, there was a huge build-up of demand for goods and services as servicemen came back, and then you've had COVID, and everyone's been at home and not being able to buy things, and then this big swell of spending money, which has caused this inflation, etc., etc. So that as you say, there's this extraordinary background which is unprecedented, and apart from sort of the end of World War II, that's how he described it. So.
Yeah, exactly. And on the back of that, I think one key thing that he mentioned is that he is still very confident in terms of the insurance side of the business, because he feels that the insurance underwriting doesn't really correlate with the general business activity. So it really depends on whether is there a freak event. He mentioned like I think Ajit mentioned this actually, that the insurance business is a bit too concentrated in the state of Florida. Right, and he said if there's going to be a huge hurricane in Florida, that will severely impact the insurance business. But other than that, Warren is very confident about insurance business because it is something that's not so correlated to the economic activity.
Yeah. So in terms of that, so going forward, to look at his earnings over the last 4 years, so that obviously this is a quarterly result, but it's also the AGM, so they're announcing their operating earnings for the whole for the year. So 2019 pre-COVID earnings of about 24 billion. 2020 first year of COVID about just over 21 billion, and then 2021 27 billion, and then last year sort of 30.8. So you've got this sudden upward trajectory of earnings, but now they're saying, hang on a minute, this is not going to continue. Is that's sort of what you took from what happened?
Correct. I think rightly so, because a large part of these earnings, due to the way that the gap regulations, right, gap earnings, the way it is structured, they have to factor in a lot of the capital gains that are actually not true earnings at this point in time. So a huge part of the earnings that came out in 2022 was by and large due to the fact that, for example, a lot of the equity share price has gone up, right? So therefore, I think that's what Warren is trying to say, is to not have our expectations overly optimistic, despite the good results in 2022.
Yeah, and sort of the other outtake from that was that I think the downturn in the last 6 months has caught some of his managers by surprise. Can you elaborate on that a little bit?
I think overall Warren Buffett he's still very optimistic in the US economy. So and I think rightly so. But with the recent pullback in the equities and the downturn, it does impact not just for other managers as well. Even if you look at Berkshire's share price, it did have an impact. So once again, I think one of the main message Warren is trying to share with us, and including Charlie as well, right, is to really not look at the short-term price fluctuation, but focus on the long-term trajectory of the business. And that's what they primarily focus on throughout a large part of the Q&A as well. Yeah.
Okay. So if we look at, take a look back at Berkshire Hathaway and their investment philosophy and what they've done and their keys to success, what's your take on that sort of background? It was the company's been around since 1965. It bought a textile business, and then rolled that in, and then started buying equities and investing in various companies. Now they own 73 companies directly. As a 100% shareholder, and then a big raft of actual listed equities as well. So what's the key to their success, and why is their returns something just under 20% annualized for the last period from 1965 compared to the S&P, which is about 9.9%. So the S&P return is half per year, but then if you take the compounding effect, their returns is about 3 million percent since the beginning, and the overall market's about 24,000%. So there's a huge disparity. So what's the key to their success?
I think that it is not just a single factor, right? I think it's a whole recipe of ingredients that made Berkshire such a successful company. But if you want me to pinpoint some of the top ones, I would say number one is really that they're one of the rare companies that really treat the shareholders as shareholders, right? In its original meaning of the word, right? They treat them as owners, and they say we have to do right by the shareholders and not do anything that just enrich the management. So I think that's number one. And number two is that when they invest, right, they are really looking at buying the whole business, even if they are not buying 100%, right? So for example, I think one of the company that was mentioned throughout the whole day was about Occidental, right? And there was a question about Warren Buffett, will you buy over the whole company? And he basically just flat out said that they're not going to buy over the whole company because they wouldn't know what to do with the controlling stake, right? But for them, when they assess the company, right, they do have the intention to buy over, right? So I think that is a very, very good reminder to everyone, is that, when you want to invest in certain things, ask yourself, if you are going to invest in it, will you actually be willing to buy over the whole company? That forces them to think deeper. And that's why, while they are owning many companies right now, the fact that all 73 of them are all profitable, not all of them are running very well, but it still made Berkshire Hathaway one of the most profitable company in the world. Yeah, so I think these are the two main factors, right? So being very shareholder focused, not just shareholder friendly, but treating shareholders as their own owners as well. And also making sure that when they choose businesses, they really go for something that that they are willing to own 100% as well. Yeah.
It's an interesting take, because a lot of managers and firms and that sort of thing see the board and the shareholders as a nuisance sometimes. So the way that they approach their own shareholders is an interesting take. So it's a complete different mindset compared to a lot of people.
Yeah, that's right.
Cool. Okay. And then in terms of, can they continue to outperform the market? As I said, their compound return annualized is 19.8%. The S&P is about 9.9%. So what are they going to focus on, and what should potential investors look for in Berkshire Hathaway for the period for 2023 and early into 2024 for the next year, if you like?
Yeah. And in terms of the business under Berkshire, both Warren and Charlie, they are very confident of the business. In fact, they even say that, after they are gone, and even if there's no very capable manager, Berkshire as a business, because it's so well established, it will run on its own pretty much, right? That's how confident they are, right? However, if you talk about going to investing going forward, right? Especially if whether buying Berkshire is a better investment compared to the S&P 500. I don't know. But one thing I think Munger or Charlie Munger did say is that he did mention that value investing going forward may face more challenges, right? He's saying that you should get used. I think the term he said was get used to making less, right? Get used to making less money because everyone is looking at the same set of opportunities. So the ability to have an information age is less so, right? So but I think the good thing is that Warren kind of like disagrees with Charlie, and he says, people do I think he said people do dumb things, right? and we do dumb things to an extent that it makes it easier for us as value investors to be profitable as well. So you kind of get two sides of the coin from both Charlie and Warren, right? One is less optimistic and one is more optimistic, and they have been in this very interesting duo for the longest time, right? Munger has always been the pessimistic guy, whereas Warren Buffett is the more optimistic one. So I don't know if it's going to really continue to outperform the S&P 500, but I think there are plans in having Greg Abel and Ajit to run the business. That shows us that they have a lot of confidence, and I think it'll still be a good business. Whether it will outrun the S&P, I think it's hard to tell, but historically it has been a great company.
So you elaborated a little bit at the start around the insurance business being sort of immune or
that's right,
the economic cycle, and so they talked about the economic cycle being going to be tough. Interest rates are high, returns revenue is going to be lower. Their own managers had overbought things, so they've got to get rid of inventory, so they're going to have to sell stuff at a discount. So the whole economic cycle is going to be tough, but yet the insurance business is sort of immune to that. So how will that help? How will that help the business over the next couple of years?
So I think as the Berkshire's equity portfolio gets larger and larger, right, with Apple and all the other investment that they buy, including the recent ones that they bought in Japan, you will expect the volatility from this end of the business to be huge, right? As the share price moves, the volatility comes in. Whereas insurance is like the stabilizing factor of the business, right? You just collect your premium, you make sure your underwriting is good, just make sure everything is under 100%, right? Go to 90. I think Ajit even mentioned that the target was to go to 96% in terms of their combined ratio. So if they can do that, then really this is a very strong business whereby the insurance side of the house provides the float, and then that kind of like buffers the volatility from the equity side, which truly generates the capital gains. And one good thing is that Geico, as the main part of the insurance business, to be honest, it hasn't been doing that well in the past. It has been losing market share to Progressive Insurance, their competitor. But Geico this year finally turns a profit, and both Ajit and Warren talk about Geico really incorporating telematics, right? So that they can really compete with the competitors again to really up their game in terms of insurance. So I'm hopeful about the insurance business side of the house, but of course it remains to be seen, right? Because the the auto insurance side of the business is a very low margin business, right? I think it's about 4 or 5%. So hopefully they can get it done, but I think it remains to be seen. So this part of the business needs a bit of monitoring, in my opinion.
Yeah. So let's just delve into why we're talking about Geico, which is obviously one of their subsidiaries. So they've got 73 subsidiaries that they own 100% of. And within Geico itself, they employ about 38,000 people, which is about 10% of their workforce. So just the subsidiaries of Berkshire Hathaway employ 382,000 people. So it's an amazing number that, they're supporting a lot of people, and a lot of households are earning income out of this business as well as the shareholders. So what are the other highlight companies? So Geico's one. What other 100% companies that they own are sort of highlight?
Yeah. I think in terms of the most famous one, nonetheless, it will be See's Candy, right? One of the main business that they always talked about. You can see Warren and Charlie munching away on the stage, right? As they go through the AGM, and I think that kind of fuels them, right, to go through the 6.5 hours. So definitely See's Candy. But in terms of revenue wise, right, other than Geico right now, I think it will be really coming from the rest of the insurance that they have, right? Insurance still is responsible for the large part of their business. So and they pretty much incorporate it under Berkshire Hathaway insurance umbrella, right? So that's number one. Number two is, I would say, is also the Berkshire energy business that they are trying to push forward as well. So I think this round is also highlighted specifically, right, like how much the Berkshire Energy is making as well. So that's one of the main business I would say that is going to keep Berkshire going forward. So I think Berkshire's business model actually for most investors should be quite easy, right? It's mainly an insurance business, and then the rest they're just buying equities, be it in the private side of the business, like See's Candy, or they're buying publicly listed companies like Apple for capital gains.
Okay. So one of the companies they mentioned they own 100% of was Clayton Homes. They employ about 20,000 odd people within Clayton Homes, and so that's obviously with the housing downturn, how did they see that business, that individual business?
No, the interesting thing is that when I'm talking to the people on the ground at both the AGM and the networking events, they actually don't see that the housing market is going down per se, right? In fact, Clayton Homes occupy a very good niche a market where they don't just do very luxurious homes, but they actually provide the mass market homes, right? So that is kind of still in demand pretty much. So I think one of the good thing coming here is that you don't just hear about the news about the US housing market not doing well, but really hitting the ground, talking to people. In fact, if anything, when the vibe I get from them when I talk to them is that rents are going up still, prices are also going up.
Inflation's higher, interest rates are higher, so people are wanting more return on the property that they own by charging people more rent. So it's
exactly. And many of them had their mortgage rates locked in previously at a much lower rate before the rate hike happened, right? So many of them have like 30 years locked in at 2.5%, right? So even with the high interest rate right now, it's not going to compel them or force them to sell at a very low price. So actually, I think housing market is something that I feel that is very much misunderstood overseas. But when you come to the US, then you truly understand that it is not, of course, not booming as much as 2021 and 2022, but it is still holding at a very high level. And I think for Berkshire, the Clayton Homes, where they supply the mass market, right, is going to do quite well. But I think Clayton Homes,
kit set type homes.
Sorry?
Pretty basic kit set type homes, aren't they? Is that right?
Yeah, exactly. So they're not doing luxury homes where the prices can fluctuate a lot, right? They're just doing maybe farmhouses, homes that's under $100,000, So and these are going to be in higher demand as people's pockets get tighter as well, right?
Yeah. We talked a little bit about interest rates. We'll move on to the individual equities they own in a minute. But in terms of the interest rate change in interest rate, one of the one of the highlights for me is their interest income. They just is the most recent investment, which is about $3 billion in treasury bills, was at a yield of 5.92%. They mentioned that as part of their first part of the meeting, and that's complete opposite to COVID times where interest rates, they said they got as low as 4 basis points. So the difference, obviously between 4 basis points and 592 basis points is a huge amount. So interest income forward, that's going to be a bigger part of their income, obviously.
Yeah. So in fact, right now, we do see that warrant is actually going after the interest a lot, because I think the main thing is that they don't see very attractive opportunities at this point in time. So there was a huge part of the AGM where he talked about cash is not trash, and Charlie said I like where my cash is. so they are all for keeping cash on the sidelines, waiting for a better opportunity to come to them. And in the meantime, they are just buying treasury bills to make sure that they take advantage of the high interest rate, right? And so I think that's a brilliant move. You don't see anything good. You don't have to force yourself to invest. You don't have to be to invest even though you have cash. And I think that's something that many retail investors can learn from as well, right? It doesn't mean that you have to be always invested in the market. Yeah, exactly. So in fact, right now, I think they talk about the money market fund. In fact, I think Charlie is the one who said that. Maybe I'm wrong, but I can't remember exactly. But they say that everyone should put some of their savings in money market fund, because you are kind of out of the banking system, right? So they talk about the banking crisis. So if you're out of the banking system, you're in the money market fund, and you still can get about 4%, maybe even 5% as well.
Yeah. Okay, cool. So in terms of the direct equity, so we've mentioned that a little bit, and that's what a lot of people always dwell on. They don't look at the actual direct, the subsidiaries. They look at the direct investment. So they've currently got about $340 billion of direct investments, and so what have they done over the last little while, which has sort of been a little bit different? Have they bought or sold, or what's been happening?
Yeah, so I think the latest news came out is that they actually trimmed about 20% of their Chevron position. To give the audience some context, Chevron was the third largest position, right behind Apple and Bank of America, right? So they have trimmed about 20%. I think that brings them about, I think 16 or was it $14 billion, right? Which they can redeploy as well. And there are also some analysts saying that they part of their sale might also mean that they have fully exited some of the positions, for example, some of the banks and even TSM, Taiwan Semiconductor as well, right? So I think they are just amassing more cash, right, to hold on the side and to wait for better opportunity. And I think in terms of Chevron, they are not fully exiting yet, but because since they have bought Chevron has already gone up quite a lot, right? So it absolutely makes sense for them to take some profit here.
Yeah. Okay. So they sold about 13 billion of equities in the first quarter. So what did they buy? Did they buy much or not much?
The only thing that they bought that we could see is that Warren actually make a trip to Japan and increase their stake in the top 5 Japanese trading firm, right, in Japan. I shall not try to pronounce the names, but so I think he is still quite optimistic about the state of Japan economy, and I think one thing he mentioned during the AGM is that he really likes the management, how they run the business, and the fact that the management in the Japanese management also have very long-term thinking, right? And that's something that he admires as well. But I think one of the main thing is that it is just unbelievably attractive in terms of valuations, right? Because as a group, right, these Japanese trading firms, they are earning about 14% yield, right? 14% earnings yield, not dividend yield, but earnings yield. So business-wise is earning about 14% yield, but on top of that, they are also paying dividend. At the same time, some of the companies are also repurchasing shares, right? So he liked what he sees, and at the same time, this Japanese trading house actually kind of resemble what Berkshire is doing, right? They are also going out there buying
Buffett
businesses.
Buffett understands those companies. He understands
Exactly. Yeah. Yeah. He understands how they work, how they make money, and that goes back to what Buffett always says, right? Invest within your circle of competency. So he sees it as that. Yeah.
Yeah. So they are somewhat similar to Berkshire. So those
Yes.
are Itochu, Marubeni, Mitsubishi, Mitsui, and Sumitomo.
Mitsui.
So they're the big trading
That's right.
houses in Japan, the five biggest. So
Yeah.
so they've bought about nearly $8 billion worth of those equities. They've only spent about another $2 billion in the US, and yet they've done a stock repurchase with some of the cash as well. So the shareholders will be quite happy that they've bought some back of their own stock, because that'll increase the value of their stock as well. Stock repurchase. Yeah. Okay.
That's right.
Cool. So in terms of the key holdings, so a lot of, and Warren sort of, if you look at the direct equities, Apple is now nearly 47% of their portfolio. And some of the people said, "Oh, you're not diversified enough." But how did Warren sort of handle that? Because he's got all this big other bucket of cash and other direct holdings. So how did he handle the questions around under diversification and too much focus on Apple?
Yeah. So he actually handled it I would say very well, because one thing he immediately highlighted is that whatever is reported out in the public sphere shows that Apple is a huge portion of Berkshire's portfolio, but that's not accounting for all the privately owned business where they own 100%, right? So if you bring that portion of business in, it's actually a much lower percentage. But to them, it is not about how many percent they want to add it to the portfolio. In fact, I think Warren said that he loves Apple as a company for two reasons. One is that Apple is a very different business from the other business that they own, right? And he says that it just happened to be a better business than any of them, right? So he actually feels that the business model of Apple is the most superior out of all the business that they own. So therefore, it makes sense for them to have a large allocation. But not just that. The second reason why he liked Apple so much is that, he talked about them buying See's Candy and buying NetJets. So when they have bought 100% of these companies, they can't buy 200% of See's Candy, for example, right? So they have to stop somewhere. But he says and that is a big problem for Berkshire, because Berkshire is such a big company. They would love to own more of a good business. So even at this point, when they have let me just look at it. They are owning about 116 billion worth of Apple shares, but it only makes them a 6% shareholder.
I know, it's so funny.
Right. So it allows Warren and Charlie, or Berkshire as a whole, right, to continue to buy more if they want to, right? Right. And so that kind of explain why they are buying so much of Apple. Firstly, it's a great business, and secondly, because business is Apple is such a big company, Berkshire can allocate more without running into like the regulations where they own 10% or more, right?
And just around 2015, it was worth about $1 trillion. It's now $2.8 trillion. So it's gone up a lot. And it's been a great buy for them.
Exactly.
And so in terms of other shares, so they still own other S&P 500 stocks, and they own they have a major shareholding in 8 or 10 of the major ones like Coca-Cola, Bank of America, American Express. We mentioned Chevron. Is there any others that sort of stand out?
Yeah, so I think of course Occidental as well, right? They have been increasing their purchase of Occidental. They even increased it right before, not say right before, maybe a couple of weeks before the AGM. So I think the top few such as Apple, Bank of America, Chevron, Coke, American Express, Kraft Heinz, Occidental, these would already form, I would say, close to 60%, right? So if you look at Berkshire Hathaway,
be closer to 70, I think, because of the
maybe closer to 70 as well.
Concentration of Apple at 47%.
So I think overall, Berkshire is still a very concentrated business. Because the rest are just tail, right? They don't really account for much of the business.
And they haven't bought any Tesla?
No, not yet.
What's their view on Elon Musk?
Well, Warren is always someone that is more kind. He's more careful. He's more careful with his words, right? So, whereas
Charlie's a bit
uh,
harsh.
yeah, Charlie's a straight shooter, right? You know, when you're 99, you kind of say
Yeah,
what you have in mind. But he does give Elon praises. He talks about Elon being a very talented person, but he feels that the things that Elon tries to do are very difficult, right? He talks about it being almost impossible, and Berkshire or Warren and Charlie in this case, he says that we are different. You know, we are trying to look for an easy job that we can identify. We are not here to change the world. So that's quite interesting, right? So he said that they are not here to compete with Elon in that sense, right?
yeah,
It's a different way of investing. He says that Musk has a pure focus in solving problems, but some of the jobs are quite impossible. Whereas for Charlie and Warren, they like to do simple stuff.
and invest in businesses that they know and understand.
Yeah, exactly. Yeah.
Okay. So in terms of some of the other things that they talked about in terms of banks and commercial property. Those were when people sort of look at the problem areas of a market. They mentioned commercial property. They mentioned banks. So what's
Yeah.
your take on what they said there?
Yeah, so I think commercial property wasn't a big thing that was mentioned. It was just brief mentioned in passing that Berkshire has never been very active in commercial real estate because for tax reason, right? I'm
Yeah,
not sure exactly why within the tax reason, but he's saying that it doesn't really make sense for Berkshire to own commercial real estate. But I think the important thing about the commercial real estate that was highlighted is that he talked about the downtown in the US are emptying out, right? And he think this
yeah,
is going to be quite significant when everyone moves away and don't use the offices anymore. So
yeah,
maybe some of these mortgage loans might run into trouble,
yeah,
right? So, but he said, overall it's going to be okay because it's just going to be one set of owners buying these properties, selling to another set of owners. So,
yeah.
yeah, I think there's no problem.
And are you
So
seeing
what
that
was yeah.
seeing much in that in Singapore? Is there commercial real estate that's coming up for renewal and people aren't going ahead because COVID has sort of changed the mindset. We don't need to
Mm.
all be in the office for 10, 12 hours a day. We can work from home and that sort of thing. Is that happening in your part of the world as well?
Yeah, interestingly, I think it's not happening in Singapore. I think possibly due to the fact that Singapore is such a small country anyway, right?
And the
So,
houses
so
and your houses are quite small, so you want to get away from them.
yeah, exactly. And I think right now, because my office is in the CBD as well, I do see people coming back. It's getting crowded during lunch as well. So, but
Yeah,
yeah, I think Singapore is a little bit kind of a unique case
it is
in this, yeah,
concentrated.
for commercial real estate. Yeah. In fact, if anything, I think the news was saying that Singapore commercial office rent is going up. Yeah.
Yeah, yeah.
So it's
Okay.
slightly different. Yeah.
Yeah.
So
And
you
so
were saying the second part of the question?
the second part was around banks. So
Yeah.
obviously we've had this problem with, it started with Silicon Valley Bank and these other banks that have folded or been taken over and that sort of
Mm,
thing. And
mm,
and that's largely also the whole factors around inflation and high interest rates that high interest rates have hurt these banks because they you know not earning as much income. Well, they should be earning more income by high interest rates, but they're locked in for too long, and so they're now funding at a higher rate than what they're actually
mm.
lending out, because of their duration of interest rate risk is affecting them. So what
Yeah.
did they say about banks and the like? And are they investing in banks, or they think this is an opportunity to buy them, or not?
Yeah. So I think in terms of banks, they were in line with the government sense that they are approving that the FDIC basically bail out everybody, right? Because they feel that if they only cap it to the FDIC limit of $250,000, that
Yeah,
would create a panic in the banking system. So they are quite approving of that, but Charlie was still critical about the money printing, and they talk about the incentive in the banking systems are not in the correct shape, right? So he says that there are a lot of things that they could do better, but in terms of Bank of America, which is the second largest holding, they are still very confident. Mainly, I think Warren highlighted that they understand how Bank of America makes money and is not as levered. And they are not so much into the investment side of the house as compared to the other banks, right? And of course, they talk about the management as well. They are very confident in the Bank of America management. So I think these are the main things. We also didn't see them selling Bank of America that much, but like I mentioned earlier on, there were some news about them selling out the rest of the bank holdings, such as the smaller banks, the regional banks as well. So I think they also talk about that the commercial real estate loans, if these are souring, it might hit the regional banks more so than the big ones. Right?
Yeah,
so
I
I think
agree.
so I think in general, the Berkshire as a whole, or in fact just Warren and Charlie, they are still quite confident with the big banks, right? Where they are much more liquid, they are much more funded as compared to the regional banks.
Yeah. Okay. So just in terms of the things that caught your eye, we mentioned Japan and buying into those investment houses there, or big businesses there that they understand. Is there any other things that they're looking at buying, or did they mention that? They seem to be sitting on their hands with this big chunk of cash. They've sold a lot of equities but didn't buy much more. So that they only spent 20% of what they sold. So is there anything else in terms of direct equities that our viewers should know about in terms of what they may have bought?
Yeah. I think actually one of the big hint that they gave was that if they don't see anything that is attractive, they will look at having more share buyback as well. So I think in terms of equity purchases, I don't have better insights in terms of what they're going to buy next. But they are definitely looking at share buyback for Berkshire. In terms of the Japanese trading house, the point to note is that they did mention that they are willing to buy more, but they can't go above 10% without approval. So I do expect them to increase their position in the Japanese trading house to as much as they can. Yeah.
So at the moment, for example, the tissue
now it's about 7.5. Yeah, now it's about 7.5.
7.5. So to get and so the limit's sort of 9.99. Is that right?
Yeah, that's correct. Anything less than 10%. Yeah.
Okay. Cool. Rightio.
Yeah.
And then in terms of you obviously got these two gentlemen who've been outstanding friends and investors and the like, and yet they started the meeting in such a calm and steady way, even though the market is in a lot of turmoil at the moment. So how did that help shareholders in terms of their own demeanor?
Yeah, I think it does help a lot, because many people are actually here just to, look at Warren and Charlie in person and see how they behave. And there are a lot of pundits, they are bringing binoculars, looking at them from afar, trying to see if there's
20,000 people trying to see them on the stage is pretty hard.
Yeah, exactly, right?
Yeah.
So it was like a big concert, and everyone is trying to see, do they drop any hint in terms of the expression as well. But I think Warren and Charlie did a fantastic job. They are very reassuring, and I think that helps the shareholders a lot, right? Just now, we talk about Berkshire being such an established company. They're very shareholder friendly. In fact, during the Q&A segment, I think most of the time when we hear someone ask a question, they will just say, "Oh, hi, Warren, I'm a Berkshire shareholder for how many years," right? And we even hear very commonly more than 10 years. We even hear some of them holding more than 20 years of Berkshire shares as well. So I think that also helps the Berkshire share price, believe it or not, right? Because most of the shareholders are long-term shareholders, right? They simply do not sell, right? If anything, they will just buy more along the way. So I think it greatly reduces the float, right? So, and coupled with that, Berkshire as a company is constantly buying back shares as well. So I think that helps because it greatly reduces the supply of stocks.
Yeah.
Exactly.
So
So
do you
I
own,
think
do you own one yet?
I'm a shareholder as well. So for
Okay.
those of you who are shareholder, then you can also come to the Berkshire AGM, right? And yeah, don't take too long. I mean, both Warren and Charlie, I wish them long life, best health, but you never know, right? And you don't want to be too late before you can meet them in person. Yeah.
Yeah. So a couple of what sort of the key highlights for me was sort of the markets in turmoil, and yet these guys were pretty focused on and pretty relaxed about the market. And so in terms of their keys to success and things that they are, what has been the keys to what they've done, because they always say that there was sort of four key things. One is continuous saving and reinvesting. So they paid a dividend once in 1967. But what Warren said, I must have been out of the room, and the shareholders got away on me. They always reinvest. They don't pay dividends out. So that's continuous saving is one of their keys, the key messages that they've come out with. Any comment on that in terms of their keys to successes? So there's four: continuous savings, the power of compounding interest. That they've been lucky with the American tailwind. The American economies continue to rocket away, and the other one is they've avoided many major mistakes.
That's right.
And I think that those are their four things. So was there questions around those four comments or during the actual conference?
I think I can't recall that if there was a specific questions about the success factor, but to me, I think for Berkshire, other than the four, one of the key success factor for them, right, is their consistency in terms of their behavior, right? Yeah. So they don't get carried away, with like the hype, right? In fact, I think there was a few questions that were earlier on asking about AI, right? Yeah. And they were like, oh, what do you think about the AI? Do you think it's going to be disrupting value investing? Do you think it's going to be another great business? And basically Charlie just said no, right? Right. Charlie being Charlie just gave like a very pointed answer, saying no, I don't think AI is going to do anything very different. He does see the potential of AI, but he does sense a bit of a hype as well. So, the consistency in their investing behavior to me is also a very key success factor, so that, they don't lose money. Like what Warren Buffett says, right? Rule number one, don't lose money. And rule number two, refer to rule number one. And how do they do that? Is when everyone is very, enamored with all the new ideas. They just stick to what they know, and they are very steadfast in what they invest in, and they don't deviate, right? Their rules. And the good thing is that I think they have kind of built that into the next generation, right? Greg and Ajit as well. So yeah, I think going forward, Berkshire should be in good hands, and yeah, although I do hope that they continue to be at the helm for as long as they can. Yeah.
It's interesting because the iPhones and all that sort of thing were overhyped, and they waited until 2016 to buy Apple, and AI is they've said it's overhyped, and to me electric cars are overhyped, and things like crypto were overhyped, and a lot of retail investors. The danger is you go into these things which are the flavor of a minute, and
yes, that's right,
and that's a big danger for retail investors, I think.
Correct. Yeah. So I mean, one thing that I think they mentioned about one of the Berkshire's strength or advantage is that they are constantly in tune with what the consumer wants. So they don't really care about the hype that's going around. They are just very focused in their businesses and say, okay, what do the customers want? How can we serve them better? And I think that helps them to not just find great businesses to invest in, right? For example, identifying that Apple has such a strong moat in terms of the iPhone sales, but it also helps them to improve their existing businesses that they have overriding control, right? Where they can implement changes and make them even better business, right? Just to give you an example, when I was at Boschim's, one of the jeweler that they own 100%, right? And when I was there shopping for a gift for my wife for upcoming Mother's Day, the experience was really something that I don't experience in Singapore. Right.
And so in terms of customer service, or in
Yeah, in
terms
terms
of
of
selection?
customers, yeah, in terms of customer service, I would say, I don't think the product is any better. A diamond is a diamond, right? But it is really the customer service, making the customer feel great, and yeah, and that actually generates a feel good feeling, right? So and then the customer will come back again. So yeah, coming to the AGM does help to really understand how they run the business and why their business under them continue to be much better than the competitors. Yeah.
Hope the jewel piece wasn't a surprise, because now the rest of the world knows about it, including your wife. Should
I
be
don't think she's
expecting it.
watching. I
They
don't
should
think
be
she's
expecting a
watching
big
this.
diamond, I think.
No, no. She knows that I'm buying her something, but I don't think she's watching this.
Very good. So we're just coming up to about 10 minutes to go, and we don't have any questions, so we may finish a little bit early. But let's just take, what is the a lot of the things we're doing then is around the positive. Obviously, the negatives is around interest rates being higher and therefore the returns revenue being lower and those sorts of things. So we've talked about a little bit about the hot topics like AI and Japan and that sort of thing. So was there questions or comments that you talked about to people about around concerns to the shareholders in the question and answer session? Any things that sort of stood out that are problem areas? One is obviously the banks and commercial real estate. There's a couple that I mentioned, but what else?
Yeah. I think also the fact that at the tail end at the AGM meeting there were a lot of questions about Berkshire not doing very much about the ESG, about the climate stuff, and and that was something that really ticked off Charlie was like, I don't know anything about climate. I don't know whether it's going to be better or worse, but he says Berkshire is just going to invest accordingly. So I think that, to me, that is a concern whereby if the future shareholders or maybe the future management were to succumb to such pressures, to practice a lot of ESG or maybe anything that distracts, not just ESG, but maybe anything that distracts Berkshire from its core business of identifying great businesses to buy over, right, or invest in, then to me, I think that will be one of the greatest risks. Not so much of succession plan. I think many people have in mind, like, oh, what's going to happen after Warren and Charlie passes on? I think they have already identified the successor, right? I think the ship is in good hands. And I agree with Warren when he says that, this is such a great business that, it doesn't take a genius to run it, right? So it is a good business that can really sustain on its own. So to me, it's not so much of succession plan, but really having the ability to resist external influence, because right now you have the top investors in the world, right? Both Warren and Charlie, and they have the ability to just tell people to, go away, right? Don't bother me. I'm not going to listen to you. But can the future generation do it? Can the company continue to resist this? I think that remains to be the question. Yeah.
Yeah. It's an interesting question because, in terms of fossil fuels and the like, that's part of the ESG type thing, but, everyone still buys petrol every week to put in their car. It's not everyone's got an electric car, and even then, a lot of those are run on electricity, which is generated through coal or gas or whatever as well. So, so the whole renewable energy part is still, a developing market. And are they looking at getting into renewable energy or because they have got some energy companies?
Yeah. Right now, I think Berkshire Hathaway Energy and also Precision Cars Parts, they are going into green energy. In fact, I think one of the film that was shown during the AGM is about Precision Cars Part and Berkshire Energy building a new solar farm in I can't remember which state, to be honest, but basically doing more for the green energy. Maybe I can't remember. Yeah. But to me, the key thing is that if you look at the not just the equities part where they own a lot of the oil and gas companies, right? The private businesses side, they are also having quite a fair bit of the so-called the contemporary or the traditional oil and gas business. I think they are doing more about the green energy, but definitely not letting that to lead them into poor decisions. I think that's the key thing here.
Yeah. And so their whole decision making when they invest, they sort of say, when they invest, they never regret it, they never lose sleep at night and the like. And yet a lot of retail investors like ourselves go, oh, should I really buy that? And so what's the key to their thing? I think we mentioned a little bit about it at the start. So why can they sleep at night?
I think for Berkshire, Warren and Charlie, when they do an investment, it is never a snap decision, right? It is always something that they have thought about for many years before they even take action. So even though on the news it seems like, Berkshire just bought another company, Berkshire just bought another business, but behind the scene there are a lot of research that has gone into it. So for them, the level of conviction is very, very high. Right.
Yeah.
So if
99%.
Almost 99%, right? And that's why they are able to put in large amount of money into such businesses, right? For Berkshire, even a 1% allocation are in the billions, right?
Yeah.
So they have to be very certain.
Things like Coca-Cola, they put in $3 billion when they bought it. It's now worth that shareholding is now worth $25 billion. So you're right that they can sleep at night because they've done a lot of homework. They invest in things that they actually understand and the like. So I think that's a real key for investors. One of the sayings that they have is price is what you pay and value is what you get.
Yeah.
Now, what does that mean to a private investor, and what can we take from that?
I think from that quote, it really helps the private investors to look at the market, not just looking at the price, because many a times it's always the price that drives the sentiment, right?
Yeah.
If we see a company share price surging, everyone will be very interested. They'll be like, should I buy some? Maybe you'll go up another 10% or 20%. But to Warren and Charlie, when they look at price, they are just asking the question, okay, if I'm paying $100 here, how much am I getting in real value? And to them, the real value is just one factor. I think it's just one factor, right? The operating earnings. That's the main thing that they talk about, right? How much am I paying to buy this business that's earning this much, right?
Yeah.
So to them, they would rather see the price drop, right? And buy more, right? And I know this is a very cliche saying, but buy low, sell high, but it is the gist of investing, right? It's about looking for things when it's cheap. So really, I think last year in 2022, it taught us a very painful for some people, but I think it's an important lesson where a lot of investors or retail investors, new investors, chased a lot of hype. Go into the hyper growth companies with literally no earnings, some revenue perhaps, but and the shares had a very good run up, but later on just come back to the ground, come back to earth, and that was very painful for many people. And so if more people can have the mindset and the temperament of Warren and Charlie, I think investors will do much better.
And so, they have avoided the hype. So, a key to private investors avoid the hype. We get a lot of inquiry at the moment as a broker around gold, and it's at the top of its price. And so, why are people looking at something when it's getting overhyped?
Yeah,
exactly. That's what they're saying about AI and what they say about a lot of their investments.
Correct. And they are always looking for things that are productive, right? That means it is generating cash. So I think Warren has made his position very clear on gold, that he's not a big fan of gold. He feels that it's just a piece of rock that's being dug up and being stored somewhere, right? So, I mean, I'm not saying that gold is of no value. Of course, there is a value because people are buying it as well, right? Central banks are keeping them as well. But from Warren Buffett's point of view is that he rather buy businesses where every year it is generating cash, whereas gold is just stored somewhere. It's not giving you dividend. It is not giving you earnings. In fact, it costs you to store the gold, right? That's what he said. He said it's a negative earnings company.
You've got to pay for storage and you've got to pay for insurance.
So perhaps gold can be a good balance for some of the portfolio structure that people have out there. But in terms of investing, in terms of the way that Berkshire invests, I don't think they have a position in gold at all, right? Not even in gold miners, if I'm not wrong. Yeah.
No, yeah, I think that's okay. Yeah. Okay, so we're just coming up to the hour now, and so in terms of your key things, are you going to attend again?
Definitely looking forward to come again. Need to check the schedule, but I would love to come again because it is not just about attending the AGM. In fact, the AGM is something that, to be very honest, every one of you watching right now, you can read online, almost as fast as I'm watching it live, right? So because there were people, transcribing it live for everyone. So the main AGM is not the highlight of the show, in my opinion, right? To me, the highlight of the trip, if you were to make it down here to Omaha, is to really go for all the side gatherings, side events where investors of different focus, of different interests, gather together and learn about investing further as well. So yeah, I actually look forward to coming again next year to attend all these side investor gatherings, smaller events, and really just to get to know more people as well, and also broaden the horizon of investing.
Okay, cool. Thank you very much, and really greatly appreciate your time and the effort. You've helped Tiger Brokers clients a lot, we hope, in terms of your thoughts on the events in Omaha and the Oracle of Omaha, Warren Buffett, and what he's said to the market, and his great friend Charlie Munger, and it'll be interesting to see their own age longevity over the next little while, because they're getting reasonably old, but it was pleased to see, as you said, they've got a huge stamina for people that age, sitting there for 6 hours and answering questions. So
that's right.
I'm thrilled that you've been able to attend that, and also thrilled that you've been able to share your experiences with our audience today. And we greatly appreciate your time and effort. Thank you very much. And it's coming up for just gone midnight, so like Cinderella, you might have to run away from the
No, I'm happy to be here. Thanks for inviting me to share my perspective with everyone here at Tiger Brokers. Thanks very much, Greg.
Okay, thank you very much. Greatly appreciate it. Cheers. Safe trip home as well.
All right. Bye-bye. Yes, thank you. Bye.
Bye.